Hello, and welcome to this week's edition of Ask Patrick. I'm Patrick King with Realty King's Properties, and lately I've received a lot of questions as it relates to the first-time homebuyer tax credit. So today, I'd like to take a moment to address some of your questions and concerns. On November 6, 2009, the Worker, Homeownership, and Business Assistance Act of 2009 was signed into law, which extends and expands the first-time homebuyer credit allowed by previous acts. Here's a quick review of the changes so you can determine if you are eligible. Let's start with income. What are the limits? The new law raises the income limits for homes purchased after November 6, 2009. Individuals with a modified adjusted gross income up to $125,000 and couples with a modified adjusted gross income up to $225,000 can receive the full tax credit. If you're an individual and your income falls between $125,000 and $145,000, and a couple with an income between $225,000 and $245,000, you will receive a partial credit. Keep in mind, this is only for homes purchased after November 6, 2009. If your home was purchased prior to this time, you must meet the income limits established under the Housing and Economic Recovery Act of 2008. Next, who qualifies? There are two groups, the first of which, of course, is the first-time homebuyer. First-time homebuyer would be a buyer who has not had interest ownership in a home within the last 3 years. If married, this also includes your spouse. That means your spouse cannot have had interest ownership in a home in the past 3 years as well. The second group would be current homeowners. Current homeowner would be a homeowner purchasing a replacement principal residence. To qualify, you must have lived in the same principal residence for any 5 consecutive year period during the 8-year period that ended on the date the replacement home is purchased. How much money will I receive? First-time homebuyers will receive a credit of 10% of their home purchase price not to exceed $8,000. Current homeowners will receive a credit of 10% of their home purchase price not to exceed $6,500. If you are married, filing separately, your credit is half these amounts. When does the credit end? The credit ends on July 1st, 2010, which means you must close and fund. Again, you must close and fund on your home no later than June 30th, 2010. There is a binding contract rule that is a part of the revised tax credit. If you have not purchased your home by April 30th, 2010, make sure you have a binding contract to purchase in effect no later than April 30th, 2010. Otherwise, you will not qualify for the credit. Is there any limitation on the purchase price of my home? Yes, your home purchase price cannot exceed $800,000. Which properties are eligible? The extended homebuyer tax credit may be applied to primary residents, including single-family homes, condos, townhomes, and co-ops. Again, single-family homes, condos, townhomes, and co-ops. Does the tax credit have to be repaid? You must repay the credit if you do not occupy the home as your primary residence for a full 3 years after you purchase. If you occupy the home as your primary residence for 3 years, beginning on your purchase date, you will not have to repay the credit. Who cannot claim the credit? You cannot claim the credit if, number one, your modified adjusted gross income exceeds the income limits, up to $125,000 for full credit for individuals, between $125,000 and $145,000 partial credit for individuals, or up to $225,000 full credit for couples, or between $225,000 and $245,000 partial credit for couples. You cannot claim the credit if, number two, you are a non-resident alien, which means you are an individual who is not a citizen or resident of the United States. And number three, you cannot claim the credit if your home is located outside the United States. Number four, you cannot claim the credit if you acquired your home by gift or inheritance. Or number five, you acquired your home from a related person, for example, a spouse, a parent, a grandparent, a sister, a brother, children, etc. When can you claim the credit? Buyers purchasing before December 31st, 2009 can claim the credit on their 2009 tax returns. Buyers purchasing in 2010 can claim the credit on their 2009 return or their 2010 tax returns. How to claim the credit? You will need to do three things to claim the credit on your tax return. Number one, fill out Form 5405 to determine the amount of your available credit. Number two, apply the credit when you file your tax return or file an amended return. And number three, attach documentation of purchase to your return or amended return. For example, your HUD-1 settlement statement. Note, the 2008 Form 5405 can be used for homes purchased before November 7, 2009. The IRS will have a revised 5405 available by the end of November 2009 for purchases occurring on or after November 7, 2009. The revised tax credit has created some special provisions for military. They are armed services members, as well as intelligence service and foreign service personnel who are on active duty and out of the United States for 90 days during any part of 2009 will get an additional year to buy their homes. They will have until May 1st, 2011 to purchase. Also, if they sell their home prior to 3 years due to official business, they will not be required to repay the credit. If you have additional questions or concerns, feel free to contact me at askpatrick@realtykingsteam.com. Again, that's ASKPATRICK@REALTYKINGSTEAM.com.